Hi guys, welcome back to the VJ Kyla Show. With us today, we have Ryan Sauter and Steve Lattanzio of Weaver Mind Capital Management. Ryan, Steve, great to have you on the show.
Thanks so much. Great to be here.
How about we start with you guys telling me about yourself? What do you do, Ryan? What do you do, Steve?
About a year ago, based on an algorithm that Steve created about 5 years ago, we manage funds both in a long-only portfolio with personal discretionary funds, but then with outside money, with a long-short leveraged beta-neutral fund that we launched this past January.
I love that. Okay, so for all of us who have no idea what any of that means, could you break it down for layman terms?
So essentially, we believe that there is an opportunity, given the immense amount of data that drives the markets, to synthesize that data through the use of artificial intelligence and basically understanding the trends and the price movements within the market through the use of this algorithm. On a daily basis, we have a portfolio that aims to be beta neutral, which basically is market neutral. So we're not taking a long or a short bias. We're basically, through the utilization of our algorithm, both going long a series of securities within the S&P 100, which are the 100 largest securities within the S&P index, and then taking a strategic short position to cancel out the long bias and create a neutral strategy that capitalizes both on the upside, but also protects volatility and downside market movements.
Yeah, and what we get at the end of the day is, you look back at the daily correlation with the portfolio and the S&P 500, and you get pretty much a zero correlation daily. So it's really a neat mathematical thing to kind of like synthetically do this and rebalance every day. We should probably go back further in history.
Sure.
Right. My background is in engineering. Duke undergraduate civil environmental engineering, and then also in graduate school did my master's there in civil and environmental engineering, but it became more mechanical, electrical engineering also. And then I was writing computer simulations for things. So then it became a lot more distant than what you think about when you think about civil and environmental engineering. You think about concrete structures, right? Anyway, I was specifically working in this field of control theory, which is all to do with like, how do you optimally control a device to, obtain some goals. So specifically, I was working on these devices called ocean wave energy harvesters, right? So you have this device that's in the ocean and is trying to extract energy from ocean waves, which is a noisy, random environment, right? So we can imagine other noisy, random environments being stocks, right? So I took some inspiration from that. But, there are a bunch of different like leaps you have to make, and then you use more complex algorithms, more dimensions. Like, conceptually, maybe ocean waves are somewhat similar to stock markets, but stocks are there's so much randomness, like, that people just don't appreciate. I would say the same is true with ocean waves, but just not the extent, right? Anyway, like over the years, I've improved this algorithm, and you can build different strategies on top of it. But I've been dabbling in this. Eventually, I made money in my day job and started putting real money behind this when we had the advent of brokerages like Alpaca, allow programmatic API access for free, and so then just started building a track record. And Ryan was
well. I think we have to take another step back and say, through every entrepreneurial journey, I think there are kind of three key elements. There's the team, there's the idea, and there's a whole lot of luck. And where we feel very, very privileged and lucky is that Steve here not only is a fellow Duke graduate like myself, but he's my neighbor. And so as I got to know Steve as a neighbor, and I got to know his wife and his kids, and our kids became friends, and our wives became friends, and our friends became friends, and Steve became part of my social and kind of neighborly network. I started to understand kind of just how smart Steve was, and just how intelligent this design of an algorithm that he had created was. And so over a lot of alleyway basketball behind the two of our houses, we just basically did a lot of Wall Street rap, right? Like we had a lot of talk about the markets. We had a lot of talk about my stock picking as a human, his algorithms stock picking as a machine, and we like to play man versus machine. And about 2-3 years into this exercise of just friendly banter, I started to realize that the machine was just trouncing me. And so, as I started to understand what Steve had built, and again, the team and the idea started coming together, that element of luck just really transformed the opportunity. So I was in a spot about a year ago where I was exiting a company that I was working for out in California. Steve was looking to basically take this idea that he had made and commercialize it. And so we came together and we realized, let's take what you've built. Let's take the track record of your personal funds that, have been in a segregated account, so that we can, take a look and really examine the strategy, and let's build a company around this algorithm. And so, the team came together fairly organically. The idea came together fairly organically. But the luck element of just being in the right place at the right time with the right smart neighbor just really, to me, made it magical. So about a year ago, we formed the LLC. In January, we launched our first strategy. And we're just incredibly grateful that we sit at the intersection of technology and markets. And we feel that the utilization of technology in markets right now really positions us to be an investment for the 21st century. If you look at, the examination of the old 60-40 model, and, if you look at the value proposition of a lot of active managers is negligible because they don't beat the index. And so, through the utilization of this technology, and through kind of the implementation of the strategy that we've launched the first fund with, our aim is to outperform the market while taking less risk. And so it's really where we sit now. We believe that that's the future of active managers. You've got a huge market for passive index investment, but we believe that with the utilization of technology, specifically, artificial intelligence and machine learning, we can beat the markets. And that's the premise by which we manage money. And that's the goal. Certainly we don't guarantee returns. But every day, we seek to outperform the market with a, more compelling risk reward profile.
Wow, that was incredible. You guys just gave me so much information out here. Let's back up to the algorithm. What was, I guess you're shorting certain types of stocks, you're going long some stocks. Are they equity focused only, or do you also use derivatives in your strategies?
Well, so we like to think about the two aspects separately. Like there's an algorithm that is predicting things, right? And then there's the strategy you put on top of that. And really, the universe of strategies you could apply on top of this and the asset classes, I mean, it's huge. Like we need to launch a fund. We picked one strategy, the beta neutral strategy, because we feel like that, sets us up for it's not like maximize the probability of success for us, but it's a combination of that and the magnitude of that success, right? At the end of the day, you're going to need some kind of you try to make your own luck, right? And we're doing that systematically. But right now, we're operating the S&P 100 universe, right? In terms of things that we're buying and selling every day.
So to sort of put it in layman's terms, every day, out of the 100 stocks that are in our long universe, the algorithm will pick between 5 and 15 long positions. The algorithm will then also select a short position utilizing an inverse S&P 500 ETF. So we really, we looked to trade efficiently. We're trading market on close. So it's not a day trading strategy. It's resetting daily to optimize for that risk reward profile, that beta neutral profile where, we look to be protected on the downside, but we look to be exploiting upside volatility.
Okay, that's really cool. How long do how long do each one of these positions usually last? Are they liquid by end of day, or do they last for a few weeks, months, or indefinitely?
We typically have about, in the back testing, we have about a 27% turnover. So on any given day, you can expect some active turnover on a daily basis. So again, it's not what you would call a tax efficient strategy. We're not seeking to be long-term capital gains investors. We believe that even with the tax inefficiency, the outperformance that can be delivered through this strategy is justifies the payment to Uncle Sam.
That's great. So this is fund number 1 you're working on. Is that correct?
Fund number 1, yes. We launched on January 24th.
Of this year?
Of this year, yeah.
Oh my gosh. Well, congratulations. Less than 2 months old.
Yeah, no, it's been exciting.
That's awesome. Okay. So at what age did both of you realize you'd want to be entrepreneurs, or did it just magically happen recently, or were you always like this?
See?
For me personally, I don't know if I would have ever, people tend to consider me probably entrepreneurial, right? But I've always considered myself, even when I was younger, I was like, I just want to invent things, right? I'm just inventing things. And I'm pretty sure I was writing algorithms before I knew what the word algorithm was. So, that's kind of like me. I think, I'm an entrepreneur is a bit of a, get there sideways from being an inventor and someone wanting to create things, right? Like you kind of, it helps to be entrepreneurial. That gets you to your goal.
To me, it's just part of, why it's incredible to be an American, right? Like it's why, you have just so much opportunity here in this country to branch out on your own. And, you both have an incredible educational system in this country and a well-developed capitalistic market-based economy. And, that's the jump ball opportunity that I think we're all afforded, is that if you have an idea and you want to go out there, you can start as humbly as one can begin, and you can make a wild success. I was listening the other day. I love to listen to David Rubenstein, another proud Duke alumni, and he was interviewing Ron Barron of Barron Funds. And, here's one of the behemoths of mutual fund investing. And Ron Barron started with $100,000. And so, he's managing $55 billion now. And the guy started with $100,000. And to me, that's the incredible opportunity where, how can you not want to be an entrepreneur in America? I come from a family where, my grandfather on one side was an inventor. He was one of the pioneers of corn ethanol when he worked with John Deere. My other grandfather wasn't afforded the luxury of an education, taught himself basically by borrowing books from a wonderful librarian in Knoxville, Tennessee, and learned the newspaper business while he was on a ship in the Navy. Fast forward through a career in journalism and the newspaper business, and he ended up owning a healthy percentage in a publishing company. And so I've watched both with the family members and the friends that I look up to. I've watched with my father. My father, for over 30 years, has been the proprietor of a marketing research company, and I appreciate that. Why not go out there and take a big swing? It's you don't always succeed, but I'm inspired by those who do, and I'm inspired by the opportunity. I think I've loved working for some of the kind of the large, so-called safe working environments that you VJ were with me at my last sort of large corporate bank. And it was a wonderful experience, wonderful people, wonderful opportunity, and incredible clients and work experience. But life is too short not to want to be an entrepreneur. So, whether you succeed or fail, there's a certain excitement, I feel, in the attempt. As long as there's blood in my veins and beating in my heart, this is just who I am.
I absolutely love that. That's exactly what it is. It's life is too short to not be an entrepreneur. It's people are like, oh wow, you're leaving your 9 to 5. I'm like, yeah, no, I'm working 24/7.
And I think, for me, it was, I view the experiences that I had on large trading desks and working with institutional investors and working sort of with and for the global behemoth banks. I view that as just unbelievable training. My education, in the financial services system, I'm very grateful for. So I don't look at my time spent at some of the larger financial institutions as time misspent. In fact, it's the very opposite. I'm incredibly grateful for the training and for the education I received. But it's just you look right now in our society and you look at some of the wild creations that are out there. I mean, you look at a guy like Elon Musk, and I know that's a hero to Steve. It's a hero to me. And how can you not be inspired by the sheer magnitude of creating something out of thin air? 10 years ago, who would have thought that not only would we be talking about SpaceX, but we would be talking about the proliferation of electric cars like this.
Absolutely. So when you guys made the jump from, I know, Ryan, you were with me at my previous employer, and Steve, you were also employed before?
I'm still
Oh,
employed.
you're still employed. Okay, even better.
Algorithms that you automate is that, like, I leave like the day-to-day like business things with Ryan, and then I'm I have a computer running and I'm monitoring it and I can check it, but I'm not occupied 9:30 to 4 p.m. with the like actively like pulling my hair out on over the fun. So I'm still, we're in startup mode. I've been fortunate, love my employer, and
another great entrepreneur.
Yeah.
Okay, all right. Well, I mean, that's amazing to hear. My question was, tell me about the support that you received or didn't receive when you started working on this business. Were you getting the support you needed, or did you feel like you're going against the grain with your inner circles?
I think pretty much. I mean, from my perspective, 100% of people were like, because they know the history of or like proof of concept fund with my personal money, and I mean, it's hard to deny what it was doing. Yeah. You're doing thousands and thousands of trades over years that you run, whatever statistical thing you come up on it, and you're like, this isn't just luck. This is doing something real, and you kind of had to prove it to yourself. And then people know you and the other things you've done, and they're like, well, you'd kind of be dumb not to pursue this at this point. So, where people are capable, I think family and friends, either expressed interest of being in the fund or already in the fund. Just a lot of support there. We didn't need investment to actually get the management company started. We were able to, it's pretty lean. We were able to do that on our own. But yeah, I think everybody's attitude has been like this is just such a great thing. Like, do it.
Oh, I think we've had tremendous support. Not only my wife and my kids and my my parents, all our friends. I think it's just incredible as an adjunct win, right? Like, you can do this with no support and go, as you say, against the grain. But I feel as if we're just tremendously blessed with the support of our friends and our family. And, as I sat down with a number of my mentors and advisors to figure out what was next for me, it's inspiring to me, the encouragement that I received. Right. So it's, I think you can't do this. You can't be this without an active network of advisors, without an active network of mentors. I've been just so fortunate over the course of my career to have a number of people that not only do I look up to, but I respect, both peers and friends and so-called adults in the room who just, give you that courage and inspiration and support. And I think that's what makes it possible. It's a scary thing to leave the safety and the confines of that secure 9 to 5. And it's a scary thing to kind of branch out and take a chance and declare, hey, this is something that I can do. Let me show you I can do it. But it's exciting, and it takes, I think it really takes the support of those around you.
Absolutely. You guys just launched this 2 months ago. Is there something in the last 60 days that you think you would redo if you had another chance?
Would have launched sooner. Yeah, would have launched sooner. There you go. I think there's no time like the present. And you want to get things done as quick as possible, right? I think the only frustration we've seen is as we do this for the first time, there are certain, I would call it, rookie experiences and mistakes, that maybe on Fund 2 will be a little faster to launch. But it's, I think when I look back in the last 2 months, it's just been incredibly exciting.
Yeah, I think we decided to pull the trigger. Was it in November? And
yeah.
Then you just had to go through all this stuff to get a fund set. I never set up a fund before, so that was, there's so much more involved. There's such a barrier to entry to do that. But once we
and I think that's a really important element is entrepreneurial efforts don't get launched without phenomenal lawyers. And so, I think we're quite grateful that our legal team, headed by a very good friend of mine who runs the investment management practice at a wonderful law firm, Ackerman, and without the expert counsel and advice of our legal team in kind of holding our hand as we launch this, I think we'd be lost. But again, it's from our accountants, our legal team, our fund administration team, really the vendors and the partners that we've taken on have really just been outstanding.
Yeah, I mean, having launched a fund myself, I can 100% mirror that. Having that support system, your vendors carry the team. So definitely get that. What are some ways you're going about raising capital, and what are some strategies you think have been working, or you're looking at exploring, or you're like, don't do this, it didn't work for me?
Obviously, in the seed stages, friends and family are crucial. Those who kind of know and trust us implicitly. That just really provides a tremendous shot in the arm and a tremendous kind of boost as we launch. Also, I'll say, it's that professional network that you cultivate over years, where a very important investor to our fund was introduced by a good friend of mine, who became a friend because 7 years ago, he launched a fund, and I met him at an investment conference, and we built up a professional rapport. Then we built up a personal rapport. And as we launched this fund, I turned to him and I said, this is our strategy. This is, this is the basis by which we're launching this fund. And he really seemed to appreciate what we were doing and seemed to believe in what we were doing, and made a referral to just an unbelievable investor who not only has committed to invest in the fund, but also really helped us shape the strategy, and really has served as a mentor. So to me, it's that long-term network of colleagues, of friends, of people that you have mutual respect. This friend who manages a fund is a tremendous fund manager, and I took the referral with a lot of respect, because I respect what he's doing. I respect the intelligence with which he's built his business, and it was just an immediate kind of synergy where, of course, I would love to talk to anyone that he would refer to us, because there's a network of trust. There's a network of kind of respect, and I think it's over time. I've always believed that it's a marathon, not a sprint. And so, as you're running that marathon, there are a lot of runners with you. And, your job is to cultivate a relationship of mutual respect. And I think the number one way that we've found success in fundraising is through that personal and professional network that both Steve and I have cultivated now for over 20 years.
Yeah, exactly. I mean, it is a bit different thinking about how to raise money for a hedge fund, in terms of, you're not going to advertise, coming to, our fund. The network thing is a big thing, basically networks of trust, but really our number one plan, our ideal scenario really is just that performance speaks for itself. At the end of the day, if we're there, we're going to be pretty comfortable.
Well, and I'll also say we are turning to professionals for help as well. We are about to sign a partnership with a professional fund marketer, and that is really important to us to really try to get in front of more institutional investors. We believe this strategy would be perfect for the endowment foundation world. We believe that this long-term, market neutral strategy would coincide brilliantly with a lot of the investment policies of endowments and foundations and institutional investors. So we are turning to a professional partner to really help open some doors. One of the things is you have to build a track record, you have to build trust, and you have to accept help along the way. So we're really trying to both turn within our personal and professional networks, but then also accept help and take on partners. And again, this particular partner was a referral from a long time, both personal and professional friend who was able to guide us in the right direction in selecting the ideal individual to help us raise money.
That's great. Thank you so much. Being an entrepreneur, as you know, takes a lot of effort. Are there certain habits that you cultivate in the morning before waking up or throughout the day that you use to get you to where you are right now?
Daily habits.
7 daily habits.
One daily habit I recently picked up, actually, it probably makes me seem pretty basic or something, is doing a Wordle. So I drink like a bottle of water and do a Wordle, and I feel like I'm like warmed up to go. But
Just ready to go. All right, Wordle.
But in terms of, I think, daily practices, I think one of the things that, going back from like the proof of concept and now to that we have a live fund, really is more about just the like attitude, like that when you look at a day's performance and it's really good or it's like really bad, like understanding how much of that is still noise and was something, your algorithm made a calculated bet, and just not being, trying to mimic maybe the emotions of the machine itself, which there's like none. Right. And just trusting it. And so, some days it gets hard to do that, but like really kind of honing that mentality that you're just, going to be resolute and go forward.
Well, and I think we received kind of feedback from an investor where, he said, guys, I'm not looking to invest in just trading. I'm looking to invest in a process. And so I think I wake up every day wanting to adhere as strictly as possible to our process. And, what I refer to this as is a disciplined, repeatable, systematic process. And so on a daily basis, I think it's just really important because we don't have the structure of having to report to anyone. We don't have the structure of having to clock in at 9 a.m. and clock out at 5 p.m. Steve and I are working 24/7, and the goal is to continue a rigorous process. And so I think every day, we are trying to create an institution. And so in creating an institution, you have to be rigorous in that process.
Definitely. I love that answer. Do you guys have a piece of advice for someone who's looking to start a fund or just launch a business on their own?
Yeah. I think one of the things we had here is that we're, what we're specifically doing is probably goes against a lot of the conventional wisdom in the industry, right? Not that there aren't black boxes in the industry, but, I started off with this like prior notion, like, sure, I tried to build this thing. I build lots of code and algorithms for different things, over the years. And it's like, well, how do I prove that this works for my own benefit? Like, how do I know I didn't mess something up? Because people don't just do this, maybe there are a couple examples where maybe you could say people probably did something similar, like Renaissance Technologies Medallion Fund or something. So, and you realize, oh man, it really is, if you don't drink your own Kool-Aid right off the bat, right, you think about it and you're a quantitative person, you're like, really, it's going to take years to prove this, right? Thousands of trades and years to prove this. And then, that kind of, not that it paralyzes you, but you're kind of like, oh man, well, why would I start? I may have to slog through this thing. And, then you've heard our story. Like, I started it, it did really well. It still took a couple years. Now we're launching our fund. Like, time ends up flying in retrospect. But I think the thing is to not have the conventional wisdom of an industry, like be too heavy of like of a prior for your beliefs, right? That you could do something that, Ryan was talking about Elon Musk, Tesla and SpaceX. Both of those examples are examples where, you said, oh, you can't make an electric car and make money off of it, right? But then, Elon's over there doing the math and he's like, I can make motors this efficient and I can make batteries, with this, kilowatt hour density. And, if we can manufacture things this much more efficiently, like we can do it. And took years to prove that out, but he believed in it. Same thing with landing rockets and reusing rockets.
Yep.
That was the thing when they started that the best minds were like, this is not a possible thing. You need too much rocket fuel to be able to come back and do that you wouldn't make orbit, right? So it's kind of like the same thing. I mean,
I'll say I had the exact same sort of inspiration, but I had it sitting in the business school classroom. right? So I went to business school right at the height of the Great Recession. And one day in finance class, we were studying correlation. And I don't know, VJ, you may be too young, but there's a great Robin Williams movie, Dead Poet Society, where he has, yeah, okay. So he has them rip out the pages in the textbook because they just didn't apply. And I had that moment in business school as we were studying correlation, and the professor threw up his hands and he said, "You can just rip that page out of the textbook. All things correlate in a crash." And so, I learned that, hey, wait a minute, all these so-called experts, all these people that dogmatically we're all afraid are better than us. No, no one knows everything, right? And no one is the global authority on investment. And I think the advice to the next generation of entrepreneur is just go out and do it. Take the risk. And I certainly have not had all successes, but I think the amazing path of learning through the successes and the failures is what kind of gives you the motivation and the perspective to see through the real opportunity. And I think Steve believes in a limitless kind of opportunity here, and I believe in a limitless opportunity because the constraint is your own mind. The constraint is your own mind limiting what the possibilities are. And I think you have a couple different types of people in the world. Some people view things as a zero sum. In order for me to make, you have to lose. And that's just not the way I view things. I view things as an exponential environment where, look around at all the created wealth and all the created kind of, beautiful entrepreneurial businesses that 10 years ago, 20 years ago, 100 years ago didn't exist. And there's just an unbelievable jump ball that exists if you want to go out and you want to put yourself at the center of the court and take tip off, right? And you may not win the game, but look, I think the incredible opportunity that is colorblind and gender blind and religion blind, and it's an opportunity for all, is this great entrepreneurial system. And it's really what motivates I think the both of us, is that we feel like we're creating something and we're excited by the opportunity to create something, and we're going to work as hard as possible to create and maintain and grow. And I think that daily motivation to say, this opportunity is our opportunity and we're going to fight as hard as we can to succeed.
Amazing. I could hear the enthusiasm and see it in your face, and that gives me goosebumps. Absolutely love it. If there is a certain book that you think every entrepreneur should read, what is it?
You're looking at me. This is going to be no surprise. I don't even know if this is considered a business book, but it's about a business. So Liftoff by Eric Berger was about SpaceX in their early days. And it was just, I was reading this around the time that we decided to pull the trigger to launch our first fund. It was just amazing how many times they had existential crises, right, that had to be solved, or like these just like roadblocks, and they just worked around them like as fast as possible. It was just move the ball forward as fast as possible, whatever you can do. And it was just like relentless. And, then they had that belief that they could, commercial spaceflight wasn't a thing. And like people didn't think there were so many failures before that. Right. And they did it. And then now they're landing rockets, and now they're putting Starlink satellites to give, internet to Ukraine in the middle of a war zone. Like, it's an incredible, company and story. So it was inspiring to me to be like, what am I doing? Like, why am I not going full blast on everything all the time? So yeah, I kind of outed myself with being I guess Tesla, SpaceX, Elon Musk, very basic tech bro. I mean, I drive a Tesla Model 3. I'm not ashamed of it. I take my daughter to school, and I come with my Model 3, and I come home and I do my Wordle, and yeah, that's me.
So not worried about the gas prices. I love it.
I think I draw mine from the world of hedge funds. I love Ray Dalio's principles. I just think there's so much truth in some of his little sayings, and I think it's Ray Dalio pushes the best performance and pushes the best out of individuals. Right? It's a constant examination of strengths and weaknesses, and it's a willingness to really be radically transparent. And to really be honest with, what I love about my partnership with Steve is I could no sooner program an algorithm than I could fly, right? So this is completely out of my skill set. And yet Steve doesn't have a background in alternative investments, doesn't have a background in fund management, doesn't have a background in financial services. So that's my background, right? So I've been working on and off at hedge funds since the late 90s. And so, my particular set of skills and his particular set of skills are completely complementary. And I think one of the great things is that we push each other to be better in our own respective arenas, but we also push each other to learn from each other. So, I've learned more from Steve in the last year than I think I had in the previous 10, right? And I think we are pushing each other to, pursue a complementary set of skills, but we're also pushing ourselves to learn and explore.
Yeah. If you think about like a Venn diagram of domain area expertise, we've got just enough overlap that we know how to communicate with each other and understand what each other are talking about. But it's just there's so much,
I still can't program in Python.
So yeah, you don't have to, but I think that's like pretty much like, for if you had two people doing any kind of startup, right, you probably need, to cover a wide swath of some like relevant industry stuff, but you need to have some optimal amount of overlap in that Venn diagram. So you're not talking past each other, right? And I think that's where we sit. So it's pretty good.
Yeah, no, just from this brief interaction, I could see the professional chemistry between you two, and I think that's incredible. You two are both going to be extremely successful in this. Where do you see this company in 10 years?
Well, we have sort of a direct way of managing success. I will tell you that personal riches is not the goal. But the way hedge funds are measured are certainly by assets under management and performance. And 10 years from now, what I really what I envision and what I kind of visualize is that this brilliant model that Steve has created, this brilliant system that over the course of my career, I haven't seen anything like this, which is really what just blew me away and created the motivation to say, wow, I want to work with this guy because this is just brilliant. What I really look for and am joyfully anticipating is to see the validation of this model. I think we will measure it by assets under management and compound rate of return net of fees. But I want to see the validation of the brilliance that Steve has poured into this come to fruition. This is something that we believe in. This is something that, with every fiber of my being, I have confidence in. And I really want to see this bear fruit, because it's to my eye, this is a different way of doing things. And certainly over the course of my 25 years in the investment management business, I've not seen it done this way. And so I'm excited at the opportunity to show the investment community that, Steve has created a better mousetrap.
Well, I think we're entering. Well, I don't want to make a prediction that we are entering a new paradigm in markets, right? But for so long, it's just been an easy money environment, right? Things have gone up until they didn't with the pandemic, and then they went back up, right? A lot, and a lot of people can look really smart in that environment, and it became passive investing. The next 10 years could look really different, right? The next 10 years, markets could just stay flat but volatile. They could go down. They could do whatever. And this strategy is designed to say, we're trying to go up every day. Every day is a new day. Our only, we're trying to maximize gains relative to downside risk. And we're trying to operate within a constraint of being uncorrelated with the market on a day-to-day basis, right? And just systematically churning. And at the end of 10 years, we hope that performance is going to be so self-evidently better than the market that everyone's going to have their minds changed on, well, were people actually smart for investing in whatever they were passively invested in the last 10 years, or were they just, their ideas at the time meshed with, a lot of factors that were just kind of beyond. They were right for the wrong reasons.
Oh, were they riding the wave? Were they riding the wave? And I think that's the exciting part, right? Like we certainly can't guarantee returns. We certainly can't guarantee that this is going to work. But we believe it will work. We believe in it, and we are excited to see this bear fruit.
And to bring this back to Tesla again, as you would expect, I invested money in Tesla and I did well with Tesla, but I think of that as I'm an engineer. I understand some of those things. I thought they had a higher probability of success than other people at the time when I bought Tesla shares. Right. And that's what that came down to me, as a personal investing decision. But at the end of the day, I don't have that as much faith in my personal picks, my ability to do that over and over again, because I've done other stocks. I was in Peloton I felt really smart when it was up 500%, and then it went back down, and I lost all the gains on that I had on Peloton. And so I was like, what do I know about anything? But you know what? My algorithm was up over all this time, and it didn't care. And I'm just I beat the market with my personal investments, but my money's on the algorithm.
Well, and again, it goes back to, is it discipline? Is it repeatable? And is it systematic? And that's, we're not trying to get lucky. We're not trying to have a one shot wonder and, take all our gains and go home. We're looking for this to be a perpetual portfolio. So we're looking for this to be all weather. We're looking, up market, down market, sideways. We are agnostic to that. What we're looking for is, an all condition portfolio that over the long term exploits upside volatility while it protects you on the downside. And I'd say, the most important thing is you got to have fun, right? I have more fun talking to Steve. I have more fun, in our first pitch. This all came about through a series of 5,000 text messages. And so, through the course of our discourse and our banter, which we were just having fun, a business came out of it. And we are having more fun doing this. We believe in this, and we're inspired every day by the opportunity.
So Ryan, what type of investors can invest in your fund?
So we are a hedge fund, so accredited investors. One day we hope to be more accessible, perhaps in a mutual fund form or perhaps in a separately managed account form. But at the moment, we are currently open to accredited investors, which, as you know, has a certain income qualification and/or a net worth qualification, excluding your primary home.
Awesome. Thank you for that. And if our audience wants to hear more about you, your team, both you and Steve, where can they reach out?
We are here in Chapel Hill, North Carolina, currently working on the website, weaverminecapital.com. But I am Ryan at weaverminecapital.com, and this is Steve at weaverminecapital.com. And we are excited to talk to folks.
Awesome. Well, Ryan and Steve, thank you both so much for your time. I'll put all this stuff in the show notes so you guys can reach out to them on their email. And again, thank you both so much for joining.
Awesome, VJ. Thank you so much. And again, congratulations on your launch, as well as I know how hard you've been working on the CFA. So that's a major milestone and accomplishment.
Appreciate it.